there are 2-3 things to keep in mind.
Yeah.
One is to diversification. It is the holy grail. You can't avoid that. Second is the asset allocation.
Yeah.
But don't worry about asset allocation for the first 5 years.
But why is that? Why is that?
Reason is that asset allocation is like building a shock absorber.
Okay.
It is building a safety net. And you have nothing to lose in the initial 5 years.
Yeah, so
while
like
you're
the-
accumulating.
the acceleration is not as much as.
You haven't accumulated well enough.
Yeah.
And then you have to figure out that at what stage, as Nilesha was saying, that, that doctor was losing his sleep.
Mm-hmm.
And at what stage do you lose your sleep?
Yeah.
And it is very difficult to visualize it till you experience it. As I was telling that you have to lose your own money.
Yeah.
You will not be, everybody, because I have seen investors' thinking is very malleable.
Mm-hmm.
But
But is that a good thing? To be malleable for an investor?
It's a very dangerous thing.
Oh,
The reason is that, we change with times.
okay.
When you are making money on a day-to-day basis, you have this urgency to borrow money to invest in the market,
Yeah.
simply because you feel more confident about
Yeah.
it. The moment you lose dramatically in a brief period of time, you suddenly realize that your risk tolerance is very low.
Mm-hmm.
And you have to really prepare yourself with your groundwork in terms that when investing in equity, it should definitely be, invested in gradually. Because markets behave, markets turn around when you least expect it.
Yeah.
And you tend to act very aggressively when the market is very inopportune, configured in a manner where your, returns are coming very easily. It is very difficult to invest money when the market is falling. We are all doing it in self-interest.
Yeah.
We are doing it in self-interest because we don't want to lose money. We don't want to really lose money while the market is going up. So when we do it in self-interest, it is very counterintuitive. And the way it works is that unless you are there for 10, 15 years, at least 5 years at the least.
So it's a long game.
It's a long-term game. And initially, if you are able, so worry about asset allocation after 5 years. Make sure you are diversified. And when you invest on your own, when you take an inordinate risk, you better be aware that, you are implementing these principles yourself. And first and foremost, the basic principle, which is always true, and it always keeps reminding, you are always reminded of that if something is too good to be true, it won't
It
be.
isn't.
So,
And the idea that something is too good to be true, it isn't, that brings me to this, this trend that a lot of younger generation is not, they are diverting their mind towards mutual funds because they have become aware of the economy, and it's a good thing. But crypto investing still holds the fancy of many people, especially the younger ones. What would you say to them?
I've been a very, very strong disbeliever of crypto, and I've been wrong.
Oh,
And I've been wrong, and I still feel that, I'm not embarrassed being wrong.
no, but like, did you change your stance?
No, unlikely. I'm old-fashioned. So, but I'll tell you why I am wrong, and why I would like you to take a chance with crypto, and why I will
Meanwhile,
never.
while you won't take the chance.
While I will never take chances.
Okay.
Because as I was telling you, that I'm a great believer of something which is underlying.
Yeah.
When you invest in a company, there is a company.
Yeah.
When you invest in a bond, when you buy the government bond,
Yeah.
or when you lend me the money,
Yeah.
it is written there that I owe it to the lender, this much rupee.
Yeah.
Crypto is something which has been invented by somebody, and it is like gold. That it is, somebody else is willing to pay more money for this, but there isn't an underlying. And you can say that is true for gold as well.
Yeah.
But gold has 1,500-year history.
And crypto is a new thing.
This hasn't. Then I have two big worries about crypto, which I think, at some point, hopefully, will come to haunt us. That crypto has turned out to be, if I have to really buy 50,000 rupees worth of mutual fund, the government mandates that I do a KYC.
Yeah.
If I have to send you $1 billion worth of crypto, nothing is needed.
Yeah.
That sounds fishy. And that is why the drug cartels, that is their primary mode of transaction. That's one.